Hello, everybody, and welcome to today's Solo401k.com Q&A session. I'm Rachel Nabers, and here with me is Ilana Brown. Welcome to you all. I know there's hundreds of you guys here, and you have some great questions. Before we get started, we like to do a little tech check. You should see a chat window here on this side of the page. Just let us know, can you see us? Can you hear us? I'm in a different office today, so I'm hoping that our sound and video comes through fine. But just let us know, can you see us? Can you hear us? Type that into the chat on that side of the page. And awesome, great, thanks. Hi, JB, May, Brian, Danny, Denny, Gary, Jim. Hey, guys. Okay. So we've got a lot of questions that we want to get through. Hey, Natalie, JB, you look awesome. Hey, Clayton, aloha, how are you? So, hi, Charles. All right, great. Well, it sounds like you can hear and see us just fine. So we're going to go ahead and get started here with our questions. Take away, Ilana.
Alrighty, we're going to start with Patrice. Hi, Patrice. It's so nice to see you here because I've talked to you a bunch of times. So welcome. Alrighty, so Patrice, she says, I'm interested in taking out a loan and using the loan to pay my mortgage. Fidelity has an option to send funds directly to my personal business account by electronic debit. I would get the funds quickly, but I'm not sure this is the best method to request a loan. Alrighty, great question. So you could have Fidelity wire you funds. It needs to go to your personal account, not your business account, but to your personal account. Absolutely. It's also really important. You're going to want to use our participant loan generator on your dashboard. That allows for documentation, which is really important because you are the plan administrator. So that is fine. You can have the funds wired. Make sure you're also paying yourself back either monthly or quarterly. We do generate a monthly schedule for you in that loan generator. Also, another way you can do it is you can request checks from either your bank or Fidelity, Schwab, E-Trade, and you can simply write yourself a check from your trust brokerage or checking account to you personally.
Awesome. And one thing, just to kind of help out here a little bit, I'm going to share my screen. And Patrice, you probably have seen this before, but just in case you haven't, on your 401k dashboard, our software will create the loan for you. So if you log into your 401k dashboard and click on Loans, watch this little video walk through here. It'll tell you exactly how to complete this form. We also have a loan calculator for here. You can change the amount. You can change the term. This will tell you how much to estimate in your monthly loan repayment. And then just input your loan amount here, your loan term, and press submit. What that's going to do is create loan documents for you, and then you'll sign those and then take the money out. So we'll just take a moment here, walk through what that loan form looks like. So if we take this, this is the loan documents, Patrice, that you'll generate on your 401k dashboard. You've got your cover page here. You've got your loan application. All this is already filled out for you. All you need to do is scroll and sign at the bottom. You're the plan administrator and the participant. You sign in both places. Sign here, participant, plan administrator. Here's your promissory note, sign, plan, participant, and administrator. Remember, you're both of those roles. And then we've got the amortization schedule for you as well, which shows exactly how much you need to repay. So just as Ilana mentioned, Patrice, you're going to go ahead and use that loan generator so that you can create those documents for your participant loan. Great question. Thanks, Patrice. Okay, our next question comes from Neil. Neil says, I'm interested in leasing hashing power to mine Bitcoin. I want to fund the lease and expenses with my 401k. The mining will be managed by a third party, and my trust will receive the mined Bitcoin to the Bitcoin wallet of the 401k. I just want to clarify that this type of investment is allowable. Thanks. Yeah, I think that investment should be fine, Neil. Of course, As we're getting started here, disclaimer, this is not tax, legal, or investment advice. We are not the be-all, end-all when it comes to compliance of your 401k. You are your own 401k plan administrator. So you are responsible for ensuring compliance of all of your 401k investments. And Neil, I would need, or your CPA would need to know a little bit more about how this deal is structured. When you say you're leasing hashing power, are you buying into a company that's buying power, maybe at discounted rates or overused power, solar buybacks? There's a lot of ways that people buy electric power to be able to, lease it to miners. You would need to talk to your accountant or tax professional or legal counsel to see how that deal is structured. But if the 401k is simply being an investor in, a structure where they're buying electricity, leasing it out to miners or selling it to miners, then that may be something that's possible. It may incur unrelated business income tax depending on how the investment is structured. So you definitely need to talk to your accountant or your legal counsel to ensure that the deal is fully compliant. But as long as you're not on the other end of the deal, you're not going to be the one doing the mining, you personally, which it doesn't sound like you are from your description here. So the investment should be fine. But again, it may trigger Ubit. So you want to talk to your accountant or legal counsel to make sure that it is structured properly so that your 401k can be the investor here. Great question, Neil. Thank you. All right. Next question comes from Alex. Alex says, I make too much income to contribute to a Roth IRA, and I don't have a Roth IRA in place. However, I am contributing to my solo 401k with after-tax deferrals, so the money is in the Roth source of money. My concern is the 5-year rule for having tax-free distributions from a Roth IRA. Is the best solution to set up a Roth IRA and make a small rollover distribution in 2021 from my Nabers 401k plan into a new Roth IRA to activate the 5-year clock? I was concerned my income was too high. Really good question, Alex. Before we proceed here, I'm going to just go ahead and say that this is definitely within the realm of what your accountant should be assisting you with. We can share best practices, but you are the one that is the arbiter of compliance for your 401k plan, so you've got to check with your CPA. Now, a general best practice is even if you make too much money to contribute directly to a Roth IRA, it's okay to fund a Roth IRA through backdoor contributions, backdoor Roth conversion, or rollovers from a Roth 401k. Even if you make too much money to put funds directly into your Roth IRA, you can put money into your Roth Solo 401k and roll those out to your Roth IRA. And yes, as soon as you fund that Roth IRA, that should start the clock on your 5-year distribution. But I want to come back to one thing here, Alex, that you put in the beginning of your question that I think is important to clarify. You said you're contributing to your 401k with after-tax deferrals. So the money is the Roth source of money. Now, I want to make a clarification here. A good general rule to remember, and if you've ever talked to me for more than 5 minutes, or if you're a Nabers Group team member, you probably know what I'm already going to say. Ilana, what's my rule about Roth funds and after-tax money?
Not all after-tax
think about
funds.
it how you say it, yeah.
Not all after-tax funds are Roth, but all Roth is after-tax.
Correct, yes. So all Roth money is after-tax, but not all after-tax money is Roth. Roth is a designation of after-tax funds. So Alex, you and I have talked before, I'm a real stickler about this language. I'm a nerd when it comes to using proper language around this stuff because 401k plans are so very persnickety. If you made after-tax contributions, that's not enough. You can't stop there because any growth on those after-tax funds is taxable. So if you made just straight up after-tax contributions, those should be distributed, in-service distribution to a Roth IRA before any growth, or you need to convert them in plan from after tax to Roth. And I know I'm in a new office today, but next week when we do these, I promise you guys I'll have a whiteboard and we can draw all kinds of boxes and arrows together because some of this is so much easier visually. So if you come back next week, I'll have a whiteboard and we'll have props. It's going to be awesome. So you do these after-tax contributions, you have to do something with them. If you just let them grow, then all that growth is taxable. And that sucks because what's the point of after-tax? Get it into Roth. So you have two options. You make your after-tax contributions, you do an in-service distribution, and they go to your Roth IRA. Or you make after-tax contributions, and then you convert them in plan to Roth 401k. Now, Alex, if you're just straight up doing Roth 401k deferral contributions, then you're fine because they're already coming in designated as Roth. But if you did just after-tax voluntary contributions, you need to make a plan of what to do with those funds to get them into a Roth structure, either the Roth IRA or the Roth 401k. But yeah, once you move the funds into the Roth IRA 5-year clock starts. They call it ordering rules. The Roth IRA ordering rules are what take over. And it is okay to fund a Roth IRA. Even if you make too much money via direct contributions, you can do a backdoor conversion or rollover from Roth 401k. Good question. That's a meaty one, Alex. So that's a good question.
Alrighty, next question is from Ram. I'm setting up for the first time. Do I need to set up 3 accounts, a profit sharing and 2 solo 401k accounts and a Roth IRA? Alrighty, let me break that down a little. So you do want to keep certain funds separate. You don't have to keep your employee contributions and your employer contributions separate. What you want to keep separate is your different tax classifications. So it might look like this. You might have a trust checking account, have the bank add some sub-accounts, and what you'll do is you'll nickname those various sub-accounts. So you might have a traditional account, your after-tax account, like Rachel was just talking about, and then your Roth funds. So you might have 3 buckets within your trust account. You can do the same with your brokerage. You'll open up multiple brokerage accounts. So keeping the tax classification separate is important. As for contributions, you don't have to keep that separate, but you do want to, take good records of your contributions. So on your spreadsheet, utilizing our contribution forms. So that's where you'll keep good record of your various contributions. But once again, for those tax classifications, keeping them separate is recommended. You don't have to, but upon distributions, it'll make your life much, much easier.
Good question, Ram. Isn't she smart, everybody? We love Ilana. She's great. Okay, next question comes from Phil. Phil says, how do Roth conversions work for private placement investments? Example, the Solo 401k has invested in a private placement as a limited partner on a real estate purchase. The investment was made using pre-tax funds. After a couple of years, I would like to convert the investment to Roth. There has not been any additional rounds of investments, nor any different valuations done since the investment was made. How does this typically work? With your CPA, Phil, that's how it works. So it's a good question. We actually get this question fairly regularly of what do you do if you have an investment and you don't or can't liquidate and you want to do a conversion? What if you've got an illiquid asset that you want to convert to Roth? Or what if you've got liquid assets, something like Bitcoin, but you don't want to have to liquidate that before you convert to Roth? So what you'll usually do, Phil, is work very closely with your tax accountant to determine your cost basis at the time of conversion. So it's not when you originally bought in, it's what's your cost basis for the time of conversion. So if you're saying you're making the conversion today, then what is the valuation? What is that asset worth today? Now, Phil, you said for this particular private placement, they haven't done any other valuations. So talk to your accountant. They may agree that you can use the original valuation. Or they might say that you need to get an updated letter from the investment syndicator, for example. putting something in writing, valuing your investment as of the date that you want to do the conversion. Keeping great plan records is really important. And remember that anytime you convert an asset or an investment from pre-tax to Roth, it's taxable. You pay taxes on that. The IRS does not like when people take their money. So if you are doing a conversion, you want to be truthful and accurate of the valuation, how much that asset is worth, because that's what you're using to tell the IRS how much money they're going to get. So as an example, I had a client who wanted to do an in-plan Roth conversion of his Bitcoin assets. This was back in 2020, end of 2020. And he asked, this was towards the end of the year when Bitcoin was at like 25 or 30 grand or something like that. And he asked me, well, can't I just choose the date of the valuation? Because of course he wanted to choose that one day in March where Bitcoin plummeted. And so he could say that his investment, which was like 50 Bitcoin, was only worth 50 times 3,000 instead of 50 times 30,000. There's a big tax difference there in what his investment would be valued at and how much tax money the IRS would get. And the IRS doesn't like when you take what they think is their money. So Phil, you'll calculate your cost basis on the day of the conversion, just like if it was going to be a stock or a highly liquid asset. And you probably need to work closely with your accountant and or the investment syndicator to determine what the valuation is, your cost basis, at the time of conversion. Good question, Phil. I like that one. Okay.
Alrighty. And another one from Phil. Do we have to convert Solo 401k to a regular 401k if we no longer have active self-employment and are not eligible to contribute to the Solo 401k? What options do we have when we no longer are eligible for the Solo 401k? Alrighty, so I get this question all the time on my calls. Super important. So you have a few options. So one option is to, if your business that you have is not generating any more income, say you want to start a new business, show some kind of self-employment activity. The IRS doesn't say how much you need to show. So show something and be legitimate. You never want to mess with the IRS, like Rachel was just saying. So that's one option. We could update your business on your plan, not a problem. Your other option, if you are not going to show any self-employment activity at all, you do want to stop making contributions immediately, and then you have about a year to roll everything out. If everything's liquid, easy, you can roll it into, your new 401k or an IRA, another qualified retirement plan. If you do have some real estate in there, you might want to do a self-directed IRA. We offer those, and we will help you with that.
Yeah, that's great. And Phil, just to sort of touch on the very beginning of your question, if you don't have any self-employment activity, you wouldn't convert from a solo 401k to a regular 401k unless you had like a regular job 401k. You would have to go to something like Ilana was saying, like an IRA. So if 401ks are connected to businesses, solo 401ks are connected to tiny businesses, right? Owner-only businesses. So you wouldn't go to a regular 401k unless it's your job's 401k. Otherwise, you'd go to an IRA. Great question, Phil.
Alrighty.
All right. All right, next one. Go ahead, Lon.
And we have Phil again. All right, Phil. So I'm confused on Ubit, UBIT, with the single member LLC owned by the Solo 401k. It seems like if the Solo 401k invests in a private placement, there is a Ubit associated with any loan. However, if the investment is made via the LLC, there doesn't seem to be this tax. Already another great question. So Rachel did discuss Ubit earlier on. So Ubit is unrelated business income tax. So that usually occurs when your retirement account is doing business within your retirement account, which is frowned upon. You do have to pay a tax. I think what you're talking about is UDFI, which is unrelated debt finance income. and so that is when you obtain leverage for an investment within your solo 401k, or self-directed IRA. The beautiful thing about the solo 401k is that you avoid that tax. You can absolutely get leverage in the solo 401k. You're not going to pay that UDFI. With the self-directed IRA, you are going to pay that tax. It doesn't matter with the solo 401k if you're using your trust name or if you have an LLC with your solo 401k, that's fine as well.
Yeah, that's really great. And Phil, you said in your previous question that this private placement is in real estate. So as Ilana was mentioning, that UDFI is subject to leveraged real estate. So if you were investing in a different kind of private placement, the solo 401k might still have to pay Ubit, just like what Ilana was saying. But since your previous question referenced that you're investing in a private placement with real estate specifically, the solo 401k is not subject to UDFI. So that is just like Ilana said, irrespective of if you're investing with the 401k or the 401k LLC. Now, on the flip side, if you're investing with an IRA or an IRA LLC, you do have to pay that tax, that UDFI, when you invest in leveraged real estate. So it's not the LLC that gets rid of the tax, Phil. It's who owns the LLC. These are single member LLCs, which means they're a disregarded entity. The IRS doesn't even look at the LLC. They look through to who owns the LLC. If the 401k owns an LLC, no UDFI on leveraged real estate. If an IRA owns the LLC, yes, UDFI on leveraged real estate.
Alrighty, so Lynn, participant versus trustee. What are the different benefits? Does a co-trustee make decisions if I should become incapacitated? Can a co-participant be paid a salary so he can participate in contributions to the solo 401k? Alrighty, Lynn, great question. We get that a lot too. So participants are always going to be being paid from the business. So in order to be a participant, you do have to have a salary, which means you can contribute. The trustee is the one that has all signatory authority, so you get to sign for everything. It is recommended that a trustee, is also a participant. Also, if you have two participants on the plan, like spouse, a lot of people will choose one person to be the trustee, but it's totally up to you. It's your plan. You get to decide, but a participant must be paid, and a participant gets to do rollovers, make contributions, distributions, investments. So keep that in mind. And then as for your question about who makes the decision if you do become incapacitated, you will see on your signature pages that we provided for you when you first signed up with us, you will see that there's the contingent successor trustee, which you could designate, and that's who will take over.
Yeah, that's good. We get that question a lot. What happens to me if I am no longer able to work in my business or no longer able to run things? The contingent successor trustee is who takes over for you in the capacity of trustee. So we've got a couple of articles here from our knowledge base I want to share. I posted this into the chat. The first is, what's the difference between a participant and a trustee in the solo 401k? So this is going to reiterate just what Ilana was sharing here with you. And then we also have a tutorial video where we walk through how to sign your plan signature pages. And in this video, which is only like 5 minutes long, we go over, Lynn, specifically the role of a contingent successor trustee and what they do and how they, work in your plan. So good question. Thanks, Lynn. All right, now we've got a handful of questions. It's a long question that we broke up into a few parts from Nick. So I'm going to read through, and Nick, I'm going to go ahead and answer some of these questions as they come up in this, kind of 4-part question. So Nick says, your instructions recommend opening 2 accounts to keep both spouses' money separate. Good. I've done this with Solera Bank. Awesome. So 1 bank account for you, Nick, 1 bank account for your spouse. That is correct. But my question is with TD Ameritrade for trading. It's a pain to enter 2 trade orders in 2 separate accounts every time. I bought the LLC upgrade, so I'm wondering if we can use the LLC for the same way to consolidate the money. Yes, probably if you're a really super duper excellent record keeper, Nick. And I know you've got more about this in the next part. So if you just stopped your question here, Nick, I would say, no, don't do it. You want to have a brokerage account for each participant because the plan administrator, you, is responsible for maintaining a clear record of participant funds. So think about a giant corporation, Amazon, right? They have like 1.3 million employees around the world. I don't know how many they have in the US that are subject to a US retirement account. Let's say it's 500,000. That's a monster to keep track of as far as everybody's money that's in there. Do a pair of spouses probably both work at Amazon? Yes, I guarantee of their 500,000 people, there's definitely 2 people that are married and they both work at Amazon. Do they both have an Amazon 401k? Yes, let's assume that they do. Can they share their Amazon 401k? No, they cannot. So they would not. Now, there's all kinds of caveats to this, right, Nick? You know, it's not self-directed. Obviously, there's all these other employees. So there's a lot that doesn't apply to the Amazon plan, you know, for the solo 401k. But just if we're looking at very super broad strokes, we would not recommend that you mush both spouses' accounts together. So I know you have more to your question. So if you just stop there, that's how I would respond. But now let's look at part 2. So Nick is saying these 2 spousal accounts in Solera, they invest their money into this special purpose LLC. Now the money is pooled in the LLC. So I want to stop you right there, first of all, Nick. The special purpose LLC has 1 member, which is the 401k trust, and both you and your spouse are participants, so both of you guys have got money in that. So far so good. You're not putting 2 members in this LLC. It's just 1, right? LLC, 401k, and then, you know, both of you guys have got your money in that 401k. Next week, whiteboard, I promise you guys. This is not working for trying to deal with these complex structures. Whiteboard next week, promise, okay? Pinky swear. Okay, now we're in it. So now the money is pooled in the LLC. The LLC opens 1 brokerage account and funds the combined balance and then does trading in 1 LLC brokerage account. Gains flow to the LLC and then flow back to the 2 spouses in proportion to the initial contribution to the LLC. So far, so good. I am not your attorney. I am not your CPA. I am not your compliance officer, and neither is Ilana. And neither is anybody at Nabers Group. So sounds okay to me, with the understanding that you are super duper duper good at keeping these records. You never make a mistake. You never miss a trade. You always know exactly whose dollars belong to who, so that at any time, if the IRS asks for a record, you've got it. So assuming all of those check marks are check boxes or ticked, however you say it, you should be okay. That's part 2 for Nick. Part 3. I think you talk about this in the context of real estate investment, to get all the money pooled into 1 LLC to make the investment in the piece of real estate. We don't usually say this, actually. It is possible, assuming that you're following, you know, that provenance, right? The history, the origin of those funds. Can the LLC invite other investors? No. This is a single member LLC, Nick. And who's the single member? Ilana, pop quiz. Who's the single member of this LLC?
Is your solo 401k.
Exactly. Nick, your solo 401k is the one and only member of this LLC. Now that LLC can invest in other LLCs if you want to get into deals with people, but your special purpose LLC that we formed for you has got 1 member, and that member is your 401k trust. So can the LLC, this particular, your special purpose LLC, Nick, can that invite in other investors? No. What about the 2 spouses investing in the LLC at the personal capacity. I think you mean, can you put personal money in that single member LLC? No, no other members, including you personally. The people that put money into an LLC are members. So single member, the trust, that's it. Can the LLC, yes, or another LLC? Okay, I think you're with me. Yeah, you're with me, Nick. Good, good. So can the LLC invite other investors? No, not the special purpose one we formed for you. What about the two spouses investing in the LLC at the personal capacity? No, only 401k money goes in that LLC, Nick. Can the LLC invite a bunch of other investors, get a big pool of money together, and then make the investment and buy a piece of real estate? Not with the LLC we formed for you, but you can take that LLC, form another LLC, and your LLC can be a member. And then, you've got a syndication. You're inviting all these other investors. That's totally fine. But the LLC that we created for you, the special purpose LLC, should not be altered, should not be modified. It's got one member, and that member is your 401k trust. Okay, part 4. Nick, do the conflict of interest rules prohibit any of this? Do you have some instruction or documents that dive into these nuances more? Yes. Let me pull up. I'm going to share my screen for a moment here. And I'm going to pull up for you on our website, solo401k.com. We've got a whole page about prohibited transactions. I'll post that in the chat for you as well. There you go, Nick. So the conflict of interest rules definitely prohibit you from putting personal money into that LLC. Can't do it. That single member LLC's got one member. That's the 401k trust. There's no conflict of interest if your 401k trust invests in an LLC, which then invests in another LLC. That's okay. Although the ownership of that external LLC does need to be considered, right? If you personally own that LLC, your 401k LLC should not be an investor there. There could be conflict of interest. So, or self-dealing would be another potential prohibited transaction. So, Nick, this is meaty stuff. Nick had a little follow-up question. What about adding personal money into the external LLC? You got to really be careful about that because, yeah, I think there was a bit of a delay. You got to really be careful about that because if you own that external LLC, if you own it, and I think have more than 10% ownership in that external LLC, then your 401k should not be an investor either. So, really good question, Nick. I'll put a bow on this by saying that if you're trying to get a group of investors together, you guys want to get into something like a syndication, you definitely need to have an attorney or a tax professional helping you with it, because sometimes people I'm not saying you're doing this, Nick, but sometimes other people try to hide ownership through like all these different complex structures, right? I've got this LLC, but then it's investing in this other LLC, which is investing in this other LLC to try to hide ownership of the 401k really co-investing with you, which would be a prohibited transaction. You're not doing that, but other people try to do that. And the IRS can see through it if they want to. So remember, the IRS can go after anybody for anything, and they treat us as guilty until proven innocent, right? So we want to make sure that we're really carefully following these rules when it comes to prohibited transactions. And we want to make sure that we are very meticulous in our record keeping and always working with tax professionals to ensure that they, with their license on the line, they're going to be the ones to really cover their butt and always double check what you're asking. Really good question. Appreciate that, Nick.
Alrighty, Russ, can I roll over a portion of my solo 401k into a Roth Solo 401k? Can I use the Roth Solo 401k to set up an account on Binance or Coinbase type platforms to invest in cryptocurrency? Absolutely. And I know Rachel touched upon this in the beginning. You will have to pay the taxes on that. But that's one of the great things about our plan is you absolutely can do in-plan conversions, especially investing in something like cryptocurrency. How great to get that to grow tax-free. So, just like we talked about earlier, you have your multiple bank accounts, so you can move those funds right over, from your traditional to your Roth bucket. You're going to do a 1099-R. You're going to work with your CPA or accountant. You're going to pay the taxes on it, and now it's considered Roth funds. You can go ahead and open up your account at Coinbase Prime or Kraken, Binance. Make sure you're opening up the right account. It's not your personal name, always in your trust name. And yeah, you could absolutely purchase those that cryptocurrency using Roth funds.
And just to add a couple of things here, Russ, so I pulled up our knowledge base, which you can find at support.solo401k.com. And just to kind of let you guys know, there's a couple of ways you can approach this. So I'm in the 401k dashboard, right? Click on support. That's going to open the knowledge base at support.solo401k.com. If you're on our website at solo401k.com and you click on the support link, that's going to also open support.solo401k.com, which is our knowledge base. And what you're asking about is an in-plan Roth conversion. So how to take pre-tax money and get it to Roth. We've got several articles here, Russ, that are going to help you with this. I'll post them in the chat for you, at least a couple of them. These are good to read through. Also, Ilana mentioned Coinbase. So you had asked about Coinbase. We've got an article for that. It tells you exactly how to open the Coinbase account for your 401k trust once those funds are in Roth. So make sure, everybody, that you're using those tools that we have available for you. You can access the knowledge base 24/7, 365. You don't have to wait for the Q&A session. You don't have to wait for a return email. You don't have to wait for a return phone call. Click on the support link from our website or from your 401k dashboard, and you can get to our knowledge base, and there's literally hundreds of articles in there. Okay. Next question comes from Anna Lee. On your website, you stated, with the Nabers Group Unlimited Solo 401k platform, is this the same as Nabers Solo 401k? Yes. You already have your gold IRA included. The Nabers Group Unlimited Solo 401k allows you to purchase almost any type of investment with your retirement funds, including physical precious metals. No need for any additional account setup or annual fees, since the ability for your Solo 401k to purchase precious metals is already included. How do you mean? Well, Annalie, what we mean is that in some firms that are out there, some IRA and 401k custodians, they literally make you pay for all different assets. So if you have an IRA and you want to put crypto in there, there's a charge for that. You want to put gold in there, there's a charge for that. Some firms make you set up an entirely new IRA just to hold crypto, or an entirely new IRA just to hold gold, or an entirely new IRA just to hold real estate. With our Solo 401k plan, you can have unlimited investments, deposit accounts, bank accounts, and brokerage accounts underneath. So I like to say, think about your Solo 401k like an umbrella, and you can have as many accounts and investments underneath as you want. The ability to purchase precious metals is built in from the very beginning, Anna, so you don't need to do any extra paperwork or anything special. You automatically get access to precious metals.
Alrighty, Anna Lee. If I change my business from a sole proprietorship to an LLC structure, do you help to change my account name with my coin exchange platform company as well? Is it difficult to make that change? Great question. So we will update your plan documents. You just let us know. There's a few questions we'll send you. We'll update your plan for you. You do not have to change anything on your brokerage, your bank, your Coinbase Prime account, because you're going to have the same plan name, same trust name. We're just updating your documents. So not a problem, easy fix.
Yeah. Annalie, when you open a crypto exchange account, you're opening it in the name of your trust. Even if you change your sponsoring business, your trust name and your trust tax ID number don't change. So those names don't need to change on your assets or their associated accounts. It's a good question.
All right, another one from Anna Lee. We'll also help you open a bank account. What bank account are you referring to? Will you help open it in our local state or somewhere else? For you to receive rollover and/or contribution funds. Because of our impeccable reputation in the industry, we have negotiated lower or no bank fees. Alrighty, so we do have 2 recommended banks. They are awesome. Solera Bank out of Colorado, Titan Bank out of Texas. You'll find all of that in support. So yes, their fees are very low. They're great at getting your account open. And why they're so great is because they have their own solo 401k departments. You could actually open up these accounts without any funds. A lot of bank accounts require funds. And if you're waiting for a rollover check, you can't just throw $5 from your personal account in there. So that's what we're referring to as our bank account recommendations. So remember, we're not receiving your rollover or contribution funds. You will be. That's why you want this trust checking account. As for setting it up at your own bank, you can. Most banks will. It's just a checking account in the name of your trust. Not all will. Sometimes it's a little bit of a pain. We do have some tips on how to do it at your own bank, but that is your responsibility. If you're going to go with a bank that we do not recommend, you're going to have to educate them. And just so you know, if it's too difficult, just use one of our recommended banks.
Awesome. All right. Next question from Anna Lee. There are some actions you need to take if you want all of the solo 401k protection. So you're referring to a blog post that we wrote about 401ks versus IRAs when it comes to things like bankruptcy proceedings, Anna Lee. The anti-alienation clause prohibits you from willingly or freely giving your funds away. It prevents plan administrator from releasing your funds to a creditor. Your account must also be in compliance with the tax code. Would you please elaborate? Our plan provides for all of these things. Certain parts of the anti-alienation clause don't apply because you're your own plan administrator. You're probably not going to give away your own money. This is really referring to large companies that have to protect their employees. You are the only employee in your own business. You're the only employee, aside from maybe your spouse, covered under your 401k plan. So that doesn't always apply. It really depends. And if you're in a bankruptcy proceeding or you have creditors that are trying to bust through your 401k, you need to be talking to your accountant or your legal counsel, not jumping on a Q&A. So if this is something that you're going through or you need to make sure that your assets are protected, you need to talk to your tax professional and you need to talk to your legal counsel. But our account is absolutely in compliance with the tax code. We have something called an Irs Opinion Letter. The IRS looks at our plan. They make sure that all the check boxes are done correctly. They make sure that we are in compliance. And then they give us this special letter which approves our documents. And you get a copy of that because you're using our documents. So that means that your 401k is a legitimate 401k with the IRS. Good question, Annalie.
Alrighty, hi Betty. So Betty says, the bank account I have with Solera will essentially always remain at $0 since I take the money and invest it in the Schwab CRP, correct? I am new to setting it up, but I have the bank account with Solera, but that money moves to Schwab to invest. So $0 bank account balance with Solera is normal. So Betty, great question. You want to keep some money in your account at Solera because if it has a zero balance, it may be seen as being inactive. They may want to close it. So we do recommend keep a little money in there, $50, $100, just to be safe.
Yeah, that's good. All right. Next question comes from Betty. Since I work full-time and contribute to my job's 401k, do I include that when I put 401k dollars aside for my personal or side LLC business? Meaning, if I can put 50 grand into my solo 401k, I simply subtract the 26 grand I'm putting in through my employer. Yes, you're right, Betty. So imagine I have a whiteboard right here, okay? There's 2 types of contributions, employee, employer. Employee is across all plans. your 401k, your solo 401k, etc. Employee. Employer is per employer. So that would be, in this case for you, Betty, your solo 401k only. So you're right. If you're maxing out as an employee for your normal job 401k, you have to subtract that from what you can put into your solo 401k. Now, you might still be able to put a pretty healthy chunk in based on your earnings. Just if you've already maxed out the employee contribution, then what's left is the employer, and that's 20 to 25% of your net compensation from the business. Great question. Thank you, Betty. Okay, next from Annalie. And then I know we've got, whoa, a whole bunch of questions came in. You guys are awesome at this. Okay, we're just going to call it now. We're going to do these every week, no matter what. We're just going to do these every week. We might bump it up to twice a week. We'll see how we do. We're getting through about 20 or 30 questions per call. If you guys would like to see us do this twice a week, let us know. And then, we can try to bump it up so that there's, woohoo, yeah, JB. Because, really, oftentimes we can get to you faster if we do these Q&As together. We can get to you faster even than replying to emails or voicemails. We get a lot of those every day. So if we can all hang out on these Q&As twice a week. Okay, so all right, guys, we'll start implementing that. We'll find a good schedule. Maybe we do something like, I don't know, Monday and Wednesday or Monday and Thursday. Maybe we'll send out a little poll in the network. If you're not in the network, join solo401k.net. It's free. Anybody can join. We'll put a little poll in there asking, if you would like this twice a week. Okay, good. You guys are awesome. So, all right, let's try to get through these. We'll see how many we can do in the next 10 or 15 minutes. So, regarding cold storage, this is from Annalie. Regarding cold storage wallets, what are the differences between private keys, recovery seeds, pins, and passphrases? That is way outside of the bounds of what we're going to do on today's Q&A call. That's a Bitcoin and crypto and cryptography webinar all on its own. So Annalie, what you'll want to do is look at our Bitcoin trainings that we've done over the years, and we've been teaching about Bitcoin since 2013. So I'll put here, if you go to nabers.com/Bitcoin, we have, I think, 5 or 6 different webinars that we've taught, but that's a whole lot to get into as far as recovery seeds, PIN numbers, and passphrases. What do you prefer among LedgerX, NanoX, and Trezor if you were to choose? I like Trezor. Good question, Annalie. All right, John. Let's say we contribute to the solo 401k as an employee, $19,500 towards the Roth 401k, and $20,000 as an employer towards the traditional 401k. The employee is making after tax. The employer is making pre-tax. When filing taxes, do we specify that we did $19,500 post-tax? No. Roth 401k contributions are not tax deductible, so they are not listed on your tax return. You still have to keep track of them personally as the 401k administrator, but you do not list them on your tax return. And so it does not all go in as $39,500. Only the $20,000 pre-tax is claimed on your tax return, because that's what you're asking the IRS for a tax deduction for. Good question, John. Jim, how to position my 401k against Biden? Gosh, I don't know, but it seems like the tax plan is going to be really intense. So actually, we might have some information on that, Jim. Stay tuned. We'll be doing some trainings. We're going to get our CEO and founder, Jeff Nabers, to come do some trainings with us. Everybody loves when he jumps on. He is such a wealth of knowledge. So it's actually a very good, legitimate question, Jim. And the tax plan is going to be tough for a lot of us. So stay tuned. We'll have more on that. Okay, May. Ilana, do you want to take this one?
Is there a limit on voluntary after tax based on income? If my max is $63,500 a year and my income is $70,000, will that be allowed? That is fine. There is a max. You can't, like if you were only making $50,000, you can't put in the $63,500. So you can't go over what you make, but you can do the max into the voluntary after tax. Correct.
Awesome. Yeah. Good question, May Air. Thank you. Okay. Kirti Kumar says, can I convert an SDIRA to a solo 401k? Can I bring the investment in the SDIRA into a solo 401k to avoid Ubit? You bet. Oh man, there's
That's good.
sometimes I make dad jokes, guys. I'm sorry. Ubit, avoid Ubit? You bet. I sense a Google or Facebook ad coming on. Okay, so what I'm going to say here, so yes, you can, Kirti Kumar, and I'm going to go to our knowledge base rollover IRA. Let's see if I did this right. Where is it? Let me try. Oh, bam, here we go. How to roll over real estate from the self-directed IRA to a solo 401k. I'm going to post this article in the in the chat for you. There you go, Kirti Kumar. That's going to walk you through how to roll over the real estate, which is presumably what you've got in your self-directed IRA, so you can avoid the Ubit. Good question. Camille, we actually answered this question last week, so I'll make sure that you have a link to the Q&A. Camille asks, can I use a solo 401k to invest in property internationally? Yes, you can. I'm considering purchasing property in Panama, and the sales agreement is controlled by Panamanian law. Yeah, we've had a lot of clients that buy property in Europe, South America, India. It is possible. We definitely recommend you work with an attorney, either a local attorney who's familiar with retirement accounts holding offshore properties, or an offshore attorney that understands U.S. trusts. Depending on the country, you may or may not be able to title the property in the name of the trust. I think I mentioned last week one of our clients was buying an apartment or have a rental property in Spain, and they don't allow U.S. trusts to own property. So she had to work with the Spanish lawyer to create the Spanish version of an LLC owned by her 401k trust. So yes, you can invest in property internationally. You need to definitely have an attorney who's familiar with this helping you out. Mogu, is a Roth conversion still advisable if I expect my earned income to fall drastically post-retirement? Depends. Got to ask your CPA about that. That's very clearly tax advice. I think there's a lot of factors. Is your spouse going to be earning income? Do you have any investments that are producing investment income? There's just a lot of factors to that. I can't answer that with a yes or a no, Mogu. So it may be advisable for you. It may not. You got to talk to your CPA about that. You guys, let's also take a step back here. I know sometimes as small business owners and self-directed investors, we're trying to, hold on to as many dollars as we can. We don't want dollars to go out to unnecessary expenses. Let's update our brain. A CPA is a necessary expense. Necessary. If you can throw a couple $100s at a CPA or a tax professional, and they end up saving you tens of thousands or hundreds of thousands of dollars in taxes, lost opportunity cost, penalties from the IRS, that is worth it every single time. So I know what it's like to be a small business owner and need to have to pinch pennies. I know what it's like to be a new investor and need to pinch pennies because I need my dollars for investment. But I promise you, finding a good CPA or a good attorney when needed is absolutely worth it. So Mogu, you go to our knowledge base, type in CPA. We've got a whole list of CPAs that are familiar with the Solo 401k. They can do this analysis for you. All right. Lon, do you want to take this one from Brian?
Yeah, sure. Is there a requirement or advantage in using a solo 401k LLC versus a solo 401k trust for investing in cryptocurrency? With the LLC, it might be easier to get your account open at some of these exchanges. So that's where you'll see some ease. Both the trust and the LLC work just fine. My best recommendation is open up numerous accounts open up one at Kraken, Coinbase Prime, Gemini, see who gets it open first, because I know a lot of people are chatting over there about some of the platforms taking a while, and we're seeing that. So just try opening up at all of them.
Awesome. Okay, I know we've still got a lot of questions left. I'm going to just try to pick a couple real quick, and then we'll definitely do another Q&A, guys. Maybe we can try to do one on Monday and Wednesday, or Monday and Thursday, or Tuesday and Thursday, but we'll do one before next Wednesday, so that way we can get to these questions faster. And if we don't answer your question today, you don't need to resubmit it. We know which ones are not answered, and we will automatically bring those into the next Q&A, and they'll be at the top of the list. So, okay. Next question comes from my good friend Bandy. Can my trust be used as an all-purpose trust, for example, estate planning and or wills and other things, or should I start a separate trust? Separate trust. Your 401k trust is specific to 401k funds. You can't put any personal funds in your 401k trust. So for estate planning, generational asset planning, you want a different trust, different rules. The trusts are registered at the state when they're living trusts. So definitely you need a different trust structure for estate planning. All right. There are so many good questions. I'm going to take two more. So Lon, how about you take this one, and then I'll find our last one for today. Can you see it?
Alrighty, I see
up?
it. Yep. Tim.
Okay.
All right, Tim, what are the requirements for naming your trust? Fabulous question. So for your trust name, you definitely want to end it in the word trust. You don't want to end it in family trust or living trust because it's neither of those things. You know, we do recommend not naming it the same as your business, not using your full name. We have plenty of people that do. That's okay. It's just merely recommendations. We have people that'll name it after, you know, Fluffy their puppy. Fluffy the Puppy Trust. So you really can name it what you want. The most important thing is this is on your investments. This is on your real estate investment. This is on your bank account. I had someone that wanted to name their trust something so absurd. And I was like, do you think the bank's going to open an account in that name? So that's what you want to think about when naming your trust.
Yeah, it's good. And we have seen some really funny and interesting ones over the years. So yeah, it's really good. Use what you want, but also just know that other people can see it too. So all right, last question for today comes from Alex. And again, guys, and we'll do a little bit of housekeeping when we finish up here, but then we'll do one more question, then we'll do a little bit of housekeeping, okay? So Alex says, what's the percentage of taxes on the trust created by the solo 401k? Well, if you're doing it right, 0. 401k trusts are tax deferred. A 401k does not have a tax return, Alex. So I know, Alex, in particular, your clients tend to invest in a lot of precious metals. So if they are holding the precious metals inside of their 401k trust, even if they sell their metals, they are able to make a profit as long as those proceeds go right into the 401k trust, bank account, or brokerage account. There are no taxes due. All the income on a rental property is not taxable. You still have to pay property taxes, of course, but income earned in your 401k trust, investment gains, as long as those funds remain in the 401k trust, they are not taxable. They are tax deferred. There is no taxes due on any investment gains or income as long as that money stays in your 401k plan. Okay, great questions, guys. I know there's still 12 questions that we're going to seed the next Q&A session with. But let's just do a tiny bit of housekeeping here. And I'm going to share my screen to take you guys through some helpful resources that I think will maybe even make things even faster and easier for you. So, of course, as you know, your 401k dashboard is a great place to access a lot of stuff. You've got your 5500 Easy form here. That's our form generator. Oh, nuts. It's going to make me log in again. Hold on. All right, wait a second here. All right, so the 5500 Easy. If you had 250 grand or more in your plan as of December 31st, 2020, you need to fill this out because you need to file this by July 31st. You have plenty of time. If you had money in your plan, 250 grand or more, you have plenty of time, but you got to use our generator. It's going to make things way easier. Fill out this questionnaire. Our software will create the 5500 Easy for you. And then all you need to do is show it to your CPA and send it to the IRS. Lots of good forms here for you guys. If you need to make contributions, if you took a loan and you need to repay it, it's all right here. If you're brand new to us and you're starting rollovers, make sure you click on the rollover link. Fill out this short form. Our software will create a rollover packet for you. If you're taking a loan from your 401k, a participant loan, click on the loans tab, watch the little video, fill this out. Our software will create the loan paperwork for you. If you're playing with contribution calculators, that extended tax deadline is coming up. The calculators are all listed here in your 401k dashboard, so you can check them out. We still have the 2020 calculator live for you. So these are going to be your 2020 numbers. So you'll be able to find your contribution calculation for 2020 before you do those contributions or before you file your tax return. Click on the support link. That's going to open our knowledge base. As you've seen throughout the Q&A, we've got hundreds of articles in here. They walk you through everything. Bank accounts, brokerage accounts, Roth conversions. You want to open a Schwab account? Type in Schwab. Bam, how to open a Schwab account. Want to open a Coinbase account? How about Kraken? Lots of good stuff in here for you guys, okay? Then at our website, we also have our blog, which has tons of good stuff, lots of information in here. And you also can use this little magnifying glass and type in anything to the search bar, and then you'll pull up all of the articles and all of the blog posts we've ever done that are on that particular topic. So when you have a question, the first thing you want to do is look in the knowledge base, and then the second thing you want to do is look in the blog. The third thing to do is post to the network. And just so you know, the rewards link here, guys, is so that when you share this link with friends, you get paid if they set up a solo 401k. The final place to look is in the network at solo401k.net. This is free. Anybody can join it. Post your questions in the network, and then our experts will answer. Other people answer them as well. As you can see, we've got a lot of good stuff going on, lots of people talking to one another, getting help from each other. So to recap, if you have questions, if you need help, step 1, go to the knowledge base, okay? That's the KB. Step 2, go to solo401k.com and search blog and articles. And then number 3, go to solo401k.net and ask the network. This is a great way to get your questions answered, and you might find that that which you have been seeking is already there. So thank you so much for joining us, guys. These are really a blast. We really like hanging out with you guys. We really like answering your questions. They're intelligent, they're thoughtful, they're well worded. You guys are just, you're a joy. You're a joy to hang out with. We really enjoy spending time with you on these Q&As. It sounds like we have support for twice a week. So we'll try that for a while. See if it's too much, we can always knock it back to once a week. But at least maybe up until tax time, we'll try to do these twice a week for you guys so we can get to everyone's questions. And hey, if maybe we can finish a Q&A in 30 minutes instead of 75, then we can do that too. So thank you again. Thank you, Ilana, for being with us. You're amazing. We all love you.
You're amazing.
You guys are great. Have an awesome rest of your day, everybody. We'll see you on the next Q&A. We'll post in the network. We'll maybe take a poll, find out what days and times are good for you guys. I know some people said maybe 1 in the morning, 1 in the afternoon. So we'll post something there, and we'll see you on the next Q&A. Talk to you guys soon.